Hey everybody, welcome back to the channel. This is a very special episode of Daily Palantir for two reasons. Number one is the last day of September, September 30th. So we're going to be recapping everything that has happened in the world of Palantir over the past 30 days. And number two, Palantir went public on September 30th, today, 4 years ago, back in 2020. And they did a direct public offering, a DPO, and it has been quite the journey since they have gone public. So we've got a lot to talk about in terms of what happened in September. And then I want to recap what has kind of happened over the past 4 years for Palantir as a company. Let's get into it. All right, so we are ending out September. September has been a hell of a month for Palantir. The obvious thing that happened this month, which was a very big deal, is that we got into the S&P 500. Palantir, $37.20 on the day, closes up about 20% up for the month, which is just incredible. S&P 500 inclusion, we got, I think very early in September, like the first Friday of September, September 6th. That was when the stock was $29.50. The stock jumped to about 32. And since then, it has had some pretty strong momentum, closing here at 37.20 on the final day of September. As you can see right here, Palantir up about 21% for the entire month. So it has been a very strong month for September. I'll talk about some of the implications of what that means going into October and some of the deals we got in September as well, to recap those because we haven't talked about that on the channel. But it's been a strong month for the company. It's been a strong month, obviously, for the stock. The stock has reflected a lot of things that have happened in the company. Palantir hosted their 5th version of AIPCon. I was lucky enough to go to that, interview some customers, put out a video yesterday on some customer interviews as well. And they were able to accelerate AIP with different deals, like a 5-year extension with BP. And on top of that, getting into the S&P 500 has led to many institutional buyers start to get a bit more excited about the Palantir story. So it's been an incredible month for Palantir, incredible September. And now we'll just continue to see the company hopefully execute against their goals at becoming one of the most important software companies in the world. And it'll be a fun ride covering that story, as it's been a fun ride covering them over the past 4 years. So that's what we had in September. Now, I want to talk about a topic that a lot of people have asked me about. I haven't been able to make a video on this topic just because, honestly, I've been busy, but I have tweeted my thoughts on it. So if you are not following on Twitter, you can follow that in the description. You can get all my thoughts in real time when some of this stuff happens. Let's transition to insider selling. So first, let's pull up what's going on with insider selling. Here's the beginning of it. I've got it all lined up here, and then I'm going to give my thoughts. So Karp on September, I think 13th or September 12th, one of those days, 246,000 shares. Oh, September 13th. Yeah, 246,000 shares. So that was the first sell. Then September 16th, 4.5 million shares, a little bit more. Then September 17th, 4.25 million shares. Okay, still 4 million shares. That's a lot. Then you got our boy Peter Thiel. Actually, David Stat, he sold 6,000 shares. No one cares about that. That's not that big of a deal. Peter Thiel selling 7.3 million shares on September 24th. Then you have Peter Thiel selling 4.2 million shares on September 25th. Then you have Peter Thiel selling 4.5 million shares on September 26th. And then you have Peter Thiel selling 3.9 million shares on September 27th. So Karp offloaded $325 million of stock basically in a week. Peter Thiel has offloaded $1 billion worth of stock year to date and $600 million worth of stock in the past 7 days. So what are my thoughts on this? I think there's a couple things to discuss and a couple things to put into context when we get into the concept of insider selling. And I think it's really important to go deeper into just the headline. If you just saw the headline, Peter Thiel offloads $600 million of stock, Alex Karp offloads $300 million of stock, you would start thinking, well, this is like bad because these insiders are selling, yada, yada. I think there's a little bit more nuance to it. So let's go through kind of my core takeaways and theses here, and then you can put in the comments what you feel as well. First of all, Palantir is up 100% year to date. At this point, it's like 120%. This is not because of memes or roaring kitty. This is because of execution. When a stock surges that much in a year, people do take profits. If the stock was up based on pure speculation and no execution, kind of like GameStop, that would be an insider cashing out to cash out. When the CEO takes everyone along for the ride, aka helps everyone get rich, due to winning more deals and reaccelerate their growth, which Palantir has done in the commercial and the government sector, I have no problem with them taking profits. So that's my first high-level thought. Insiders will take profits because insiders have dedicated decades in the context of Peter Thiel and Alex Karp to the company. I mean, I think the shares that Peter Thiel sold, he got granted those in 2006, right? So you are going to take profits when a stock goes up. Now, I know people are questioning the timing of the sale and the amount of how much they sold, which I'll talk about in a second. But at a high level, people do take profits, whether you're retail, institutional, or insiders, when a stock goes up as much as Palantir has got up. Second of all, Karp has vested these shares for decades. He deserves to get liquid. Third, these shares were exercised from stock options, which means he had to sell to also cover the taxes. With these typical types of capital gains, the taxes are heavy. I'm not saying he didn't sell some to obviously take profits. I 100% agreed on that. But also, when you take profits, you have to be able to pay the taxes on the capital gains. And when you have hundreds of millions of dollars of capital gains, you have a lot of taxes. So you also have to sell additional shares just to be able to cover all those taxes. Now, here is my point on number 4. We'll get back to this in a second, but I think this is a very important point. If you hate Karp selling so much, you can also sell. You can sell with him at these same prices. But if you have 5,000 shares compared to his 60 million shares, it might not make sense given the allocation sizing that someone like Karp has in terms of just, him mitigating some of the risk by taking some off the table versus your stake in Palantir. I mean, if you have 60 million shares, taking some off the table is not that crazy. If you only have 5,000, 6,000, 7,000, 2,000, you might want to let that just grow over time without worrying about risk mitigating. But you have the opportunity to risk mitigate if you really hate Karp and Thiel selling as well. Now, the final point on this, a sell at these levels for Karp and Thiel is probably him saying the stock is getting up there in valuation. I think Karp and Thiel, by selling the amount they're selling in the time period that they're selling, are obviously telling us, hey, the company is probably a little expensive right here. If the market, however, is willing to pay $80 billion for Palantir, Karp may think the valuation is stretched and he's risk managing, which is nothing wrong with that, especially for a 56-year-old guy who's dedicated the last 24 years or 25 years of his life to Palantir. However, this also doesn't mean the stock has to sell off on his selling if there's enough liquidity to absorb it. But it could signal that the stock will consolidate here versus pushing forward until the next set of catalysts. Now, I wrote this a week ago. I put some updated thoughts today on Twitter as Palantir hit $37 after Thiel unloaded $600 million of stock last week. Some updated thoughts. Number 1, I think the market is finding its own narrative for Palantir independent of insider selling, which is obviously very good. And number 2, I think Thiel is obviously signaling he feels shares may be stretched right now, but again, he's held since 2006, so you imagine he'd take profits after the stock goes up 100% in a year, and if you really hate him selling, you can sell as well, and that's what I really want to talk about here. So first things first, Karp offloads $300 million, Thiel offloads $600 million, the stock goes up. Dude, I as someone who's been covering Palantir for the past 4 years, I have never seen a stock this resilient, much less see Palantir this resilient, because the last time insiders dumped, Palantir was stuck at like $18 for a while. That's not happening right now. What's happening right now? This is my analysis here. I think the market is creating a relationship with this stock that is a new paradigm for evaluating their growth in AI, the concept of the ontology, and the government business. And I believe the market, and we're seeing this with the institutional ownership go up, obviously because of S&P 500 inclusion, is starting to realize, hey, buying Peter Thiel's shares at 37, which quite literally, whether it was institutional investors or retail investors, that is quite literally what happened. Peter Thiel dumped his shares, $600 million worth of it, and the stock didn't flinch, which means people were willing. I think I bought a share because someone gave me a super chat for $40 on my market open stream, and they said, hey, you got to buy a share on me. So I bought a share at like 36.78 or whatever. That was probably one of Thiel's shares that I bought. The market is willing to absorb those sells, which means there's enough liquidity from retail or institutional investors to buy that stock. What this means to me is that the market has created its own narrative around Palantir. And that narrative is independent of Thiel and Karp selling. Quite frankly, I don't think the market gives a shit about Thiel and Karp selling, just like the market really doesn't care about Jensen Huang selling, right? Like they're going to care here and there, and they're going to, react to certain headlines and stuff. But at the end of the day, if you are a long-term investor, if you are a hedge fund, if you are someone who's managing money for a set of clients and you are bullish on AI, CapEx, NVIDIA, GPUs, you're buying NVIDIA, even if Jensen is selling 0.15% out of his $100 billion stake. So from that perspective, I think the market creating an independent narrative for Palantir is very exciting because the market's willing to buy those shares at $37 at an $85 billion value cap, market cap, which I know sounds a bit crazy. We had Chris Camillo on the podcast the other day where he specifically talked about how the valuation doesn't matter. You can agree, you can disagree with that. I tend to think valuation does matter, but there are other perspectives out there. And I think the market just believes Palantir is going to be able to grow into this valuation. Number 2, and here's my big point on this. If you just hate that Teal offloaded $600 million worth of shares. And then Karp offloaded $300 million worth of shares. If you just can't stand it, the ironic thing about this whole situation is you can sell right now at a better price than both of them. You can literally sell your Palantir stock right now after hours when you're watching. You might be watching this past 8 p.m., but like, you know what I mean? Over the past couple of days, tomorrow morning, you can sell your shares of Palantir at a better price than Teal and Karp sold them. Now, why do I bring this up? This is a very unique conundrum because most of the time when when insiders sell as much as we've seen, the stock tends to dump, right? And retail institutions, whoever is left holding the bag. And a lot of times that puts a sort of negative the taste in retail's mouth, right? Because if you're buying it at 35 because you're like, you know what, Palantir is amazing, I'm betting on this AI narrative, blah, blah, blah. And then you see, Teal sell at 37, then the stock goes to 30 and you're like, well, I'm down $5 a share, but I believed in this company. And now you got this big founder from 2006 who's selling your shares. You just feel a nasty taste in your mouth. And I'm not saying Palantir can't go back to 30. That is very possible. I think it's also possible Palantir can hit 40. Both 30 or 45 are possible. The question becomes, if you're able to exit at the same time, if you genuinely hate the insider selling at a better price than the insiders, I think it's one of the most unique situations that has ever existed for retail investors. Again, when most insiders sell the amount that they're selling, the market reacts negatively to that. The stock tends to sell off, and you've got someone holding the bag. In this situation, there is so much liquidity. There are so many people willing to buy the stock that no one's really left holding the bag because the bag is pretty stable at this $36, $37 range for now. That could change. And if you genuinely feel that, Teal is signaling to the market that something's wrong with Palantir, or Karp is signaling to the market something's wrong with Palantir, versus just like the basic explanation, which is that they're taking profits because the stock is up a lot year to date, you can sell with them. And this is not a situation where Teal selling at 36 and stock goes to 25 and you miss $11 of upside for you to be able to sell your shares as well. And now you feel salty. No, if you genuinely hate it, you can sell at 37, which is a better price than what Teal got right now. And so from that perspective, I think it's very important to put that into the limelight, which is that, look, insider selling is one of those things where people sell for a variety of reasons at the end of the day. And these are people that have dedicated their lives to the company. They deserve the liquidity. They deserve to take some profits, but they're only selling and the stock is staying at elevated levels when they're selling because there is so much liquidity to swallow up those shares that the market, quite frankly, doesn't care that they're selling, and they're willing to buy the dips that in this case, like the 0.7% dip that has happened over the past couple of days when Palantir has fallen after these insider sells. And so, I mean, I literally remember on the market open, I think it was like Wednesday, we saw Palantir go from 37.14 to 36.45. So if you want to call that a dip, that was a dip, and it was a red candle. And within 10 minutes, it was right back to 37. I mean, like that was probably Teal selling early in the morning. And because I don't know what else would have created that like massive dump. And Palantir was right back. So my point here is that there is liquidity. Retail has an opportunity to exit if you genuinely hate them selling. But you also have an opportunity to believe in the broader narrative and continue to hold on, even if you think the valuation is crazy. I mean, Costco's valuation is crazy. Netflix's valuation was crazy for a while. Microsoft's valuation was crazy for a while. Amazon was one of the most expensive stocks for years. Tesla has always been an expensive stock. So there are always going to be stocks that are expensive. The question is there a story that justifies the valuation? Then can the quantitative metrics live up to the qualitative analysis that we're getting from Palantir? And I think Q3 will reaccelerate growth. I don't know if it's 30, 40, 50%. I'm hoping it's 30%. And then in 2025, hopefully we get past that 35, 40%. And that's going to justify the valuation, if not expand the valuation. That is my belief. I know we're pricing in a lot of future growth. I'm not denying that. I'm not saying it's a cheap stock. But I am saying there's a story, there's a narrative, and at this point, Karp and Teal selling, if that's not enough to tank this sucker, for now, right? It does mean the market is developing its own narrative for Palantir, which is very bullish because it means they don't care about things like insider selling. All right, cool. So we got two deals to discuss that happened last week that I didn't get a chance to discuss. I'm not going to go super in depth on them. Just want to give a high-level overview on these deals. So here's the first one. Nebraska Medicine and Palantir announced pioneering partnership to use AI technology to advance healthcare. So Nebraska Medicine is a $2.5 billion academic health system based in Omaha. I actually had some people from Nebraska reach out and tell me that how big of a deal this partnership is. Multi-year, multi-million-dollar partnership, particularly for AIP. A couple quotes from the PR. Drew Goldstein, co-head of Palantir, or co-head of healthcare at Palantir, says Nebraska Medicine is one of the most innovative healthcare organizations in the country. While many organizations talk about having bold visions, Nebraska Medicine takes actions to translate those ideas into real solutions quickly. Their swift commitment to this enterprise partnership highlights our shared focus on rapidly delivering value and driving impactful outcomes to enhance patient care. Michael Ash, MD at Nebraska Medicine and President and Chief Operating Officer, says our partnership with Palantir is delivering real results for our patients and our staff. I believe they started working together in like January. And so within about 9 months, they came together for this partnership. The technology allows our staff to work smarter and for more of our patients to leave the hospital as soon as they're able to. More exciting for us, this is just the beginning of the innovations we'll discover together and lead the way for other hospitals. Now, the sort of simple analysis here is that the healthcare vertical for Palantir is just becoming phenomenal. And I think that healthcare vertical is not slowing down anytime soon. I mean, you're going to start to see a lot more healthcare institutions realize that they need to become more efficient, become more effective. And I think that's probably going to come from this healthcare vertical that is expanding, and from the staff scheduling and the ability to get patients in and out quicker. Like all of that, I think, is something that institutions that are academic in healthcare or hospitals themselves really care about. Here's another example from healthcare. Mount Sinai Hospital back in January spoke about what Palantir has done for them, and they get patients out 1.5 days quicker. They got to 20 additional beds. They got to add 20 additional beds in the hospital because of the efficiencies, and they saved $1.5 million in one department of one hospital. So when you save $1.5 million in one department of one hospital via Palantir software, they also spoke at the latest AIPCon. You're probably going to say, hey, maybe we can expand this to other departments in other hospitals, and how much total savings can we get? Okay, Palantir wants, a 1/10 of that in terms of the yearly payment or whatever. Yeah, that seems like a good deal. And so I think healthcare continuously will be one of those verticals that is very exciting for Palantir. The other deal we got last week was APA Corporation. So APA Corporation expands partnership with Palantir to leverage AI technology across their oil and gas operations. Again, a multi-year, multi-million-dollar extension for Palantir, which is an extension from the enterprise agreement they originally signed in 2021. A couple quotes. Matt Babin, Palantir's head of energy and natural resources, says, "We founded Palantir to help tackle the world's most important challenges. We're honored to extend our partnership with APA as they continue to play a key role in responsibly producing oil and natural gas." Travis Osborne, APA's vice president, says, "We look forward to expanding our partnership with Palantir. Our existing partnership has enabled improved operational efficiency and business viability across our global portfolio. We are excited to expand the use of Palantir AI capabilities to build on this foundation and accelerate performance and cost management even further." What's really important to me about this partnership is not just that it's a multi-year, multi-million-dollar partnership using AIP, but that it's oil and gas. And Palantir just signed a 5-year extension with BP to enable them to deploy AIP throughout the enterprise. They had an exclusive relationship with BP for about 10 years. Matt Babin was actually nice enough to come on the channel and talk about that exclusive relationship. I think they learned a lot about delivering value in the oil and gas industry, even though they could only work with one client. And now that exclusive relationship is done, they're able to work with other clients like APA and extend those partnerships and agreements that they're having as well. What's also very interesting about this is that they had an extension with BP for 5 years. This is an extension with APA. It's not a brand new deal, given they've been working together since 2021. So really, it's Palantir upselling them on AIP, and it's them saying, you know what, we had such a good relationship with you guys over the past couple of years. We want to extend that partnership and that relationship. And so whether it's healthcare, whether it's energy, whether it's defense, whether it's logistics, I think there's just so many verticals for them to operate in. And you kind of need these deals to currently justify the valuation and justify the top line growth. But the more of these deals that we get, the more likely it is that Palantir is going to be able to hit this, 30, 35% growth top line ARR, which is going to be hard to do, but I think they can get there. And if that's the case, I think investors will be very happy with the fact that they've been able to actually grow into a valuation that right now the street is pricing in for future growth. If Palantir can deliver that growth, that's going to be very important. And again, the other thing that's really important here is the network effects. If they're able to get one hospital that's getting all these cost efficiencies, that is a case study to get a lot of other hospitals. There are a lot of hospitals, not just in America, on this planet. There's a lot of oil and gas companies on this planet. This is the beautiful thing about software. It's able to scale. The question is, do you have a partner in Palantir that's willing to work with your organization and really build something transformational? And if you do, which is why Palantir is going to do almost $3 billion in revenue with only 557 clients, then you've got something that could hopefully be very valuable going forward into the future. All right, last thing I want to show for today is a clip from Palantir speaking, Alex Karp speaking when the company went public. For those that haven't seen this video, it's a really fun video. September 30th, 2020, when a younger Alex Karp decides to take his company public through a DPO. Here is the first minute. It's a 5-minute video. I'll put it in the description. But here is the first minute of that video where Karp talks about what it means for Palantir to go public. And I think it's appropriate to watch it today, given it's the 4-year anniversary of the company going public.
This has been probably one of the most highly anticipated offerings or listings in a very long time. Almost every year that we would talk in Davos, I would invariably ask you, are you going to go public? Are you going to list? And invariably you wouldn't. So let's start with why now?
Well, first of all, thank you for having me. And I really would like to thank all the Palantirians who stuck with us and built this company, and our investors who stuck with us. And you know, over the years, we've been skeptical about listing, and for lots of reasons. We really needed to build our products with enough protection so that we would be ready to launch them into the public space. And we built out PG, which is our government product, and our Foundry product, and built a way to maintain them so that we wouldn't have to scale the number of people. And you know, we've reached a base where our company is very significant, and we believe being in the public space will help us with our clients and help us grow. And quite frankly, I believe the people at Palantir who've built this company over 17 years deserved access to liquidity. And so we decided this would be a great time for us. And so far, it's been a really interesting process, and our clients are embracing it. So it's a really good time for us, and I'm very, very grateful.
And you know what's cool about this? Palantir did a DPO, not an IPO. So the bankers didn't make money off this process of going public. The employees made money off going public, which is, again, something that pissed off the bankers. And that's why Palantir has always been an unconventional company. They've always done it their way. But that's why it's the company that it is. So since they went public, the company has become profitable, joined the S&P 500 over the past 4 years, launched the most innovative go-to-market sales with AIP boot camps, hosted 5 AIP cons, won a contract with the NHS to manage their entire healthcare system, powered 20% of hospital beds in the U.S., become the first software company to help power Ukraine, and grow to over 500 customers and close to $3 billion in yearly revenue. And they also connected with their passionate retail investor community, particularly this year, that believed in the company when Wall Street didn't. So much so that Palantir CEO Alex Karp himself has referenced retail investors numerous times, calling them people who are courageous enough to invest their own money. And most importantly, they did it their way. The stock, since going public, is up 269%. Big day for Palantir investors. 37.20 close on the day, ending out September. It's just been an exciting journey covering the company, and I think they've got a lot more growth coming up. And in the words of Karp, I do think this story is just getting started. So thank you all for watching. Hopefully you guys enjoyed. Let me get your thoughts in the comments on what you feel about the past 4 years and the company's journey of going public, the deals they got with Nebraska Medicine and APA, and then also your thoughts on insider selling. You like it, you hate it, kind of how are you thinking about rationalizing it? And yeah, we'll just continue to cover Palantir as it's one of the most interesting companies in the world. And it's been a fun time all year seeing the company execute and watching them achieve their mission of becoming one of the most important software companies on the planet. Thank you all for listening and watching. I'll see you guys in the next one.